Good afternoon, everybody. I'm Mac Taylor, legislative analyst, and a short while ago we released our overview of the May revision. This is a document that we put out every year shortly after the governor has presented his updated plan to the legislature. Before I provide some summary comments, let me just take this time to thank my colleagues in the office for their work in putting out this document. It's not an easy job to kind of tackle all the numbers that have come out and in a very compressed time frame put together the documents. So I just want to thank them for their efforts. Let me start with just a couple of comments about the economy and revenues. As many of you know, we do a grounds-up original forecast on revenues in the economy. And while we're still forecasting a relatively modest recovery, clearly we've picked up a little steam in recent months. Let me just give an example of two really important variables that have improved, and that's California personal income and job growth. And in February, we were projecting personal income growth of 5%. We are now projecting 5.4%. May not seem like a lot, but that's a very important improvement in our economic forecast. Similarly, jobs we had forecast to grow in 2011 by 1.1% over the prior year. We're now forecasting 1.6%. Again, which is a good bump. And it's just reflective of the kind of improved economic activity that we're seeing. That, of course, translates into higher revenues. And what we have found out in our forecast is that we are surprisingly similar to the governor's numbers. Over the 2-year period, we're $59 million higher, which is fundamentally the same as the administration's forecast. We do have some differences on the major taxes. We're a little higher on sales tax and a little lower on personal income tax and corporate. But combined, our numbers is basically the same as the administration's. In fact, this is about the closest that I can remember of us coming out of a number compared with the administration. The governor's approach on the May revision overall is, I think, he maintains the framework that he had in January. And with the additional revenues, he basically does three things. He increases spending on Proposition 98. He buys down some debt, and he modifies a few of his tax proposals. Let me just comment briefly on Proposition 98. Because of both his the added revenues and increased property tax revenues, the minimum guarantee under the governor's program would go up by $3 billion over where he was in January. And we think that the governor wisely uses those added funds to pay off deferrals. That is, he would rescind the deferral for 2011-12 for schools, or $2 billion, that we're scheduled to do. And he also uses a small chunk of money to pay off previous deferrals. And so we think that's a wise use of the funds, and we would commend him for that proposal. In that section on Proposition 98, we try to describe where the districts are with this new proposal. Now, clearly, they're better off in the sense of with the added revenues, they probably don't have to worry about their kind of worst-case scenarios that they were considering prior to the May revision. However, there's still a lot of uncertainty with schools because of the governor's approach to have the election on the tax proposals. They're not going to know for sure the amount of money that they're going to have in 2011-12. So we try to just walk through what is the districts are facing as a result of the governor's May revision proposal. We also talk a little bit about the notion of rebenching. And this is a somewhat technical issue, but it's also responsible for part of that $3 billion increase in the Proposition 98 guarantee. It involves two different types of rebenchings, and this is where you make adjustments in either the amount of the Test 1 requirements under Proposition 98 or also under Test 2, because you're either shifting programs from outside of schools into schools' responsibility, or you're making fundamental changes in your revenue structure. So we do discuss that in a box within the Proposition 98 section. Just briefly, our assessment, overall assessment of the plan, we think it has many positives, just as we commented on the governor's January proposal. We don't have concerns about their estimates, their definition of the problem, as we've talked about, their revenue estimates, their caseload estimates, so we don't think we need to be squabbling over the numbers. We think the governor still deserves credit for forwarding a plan that achieves balance, that solves, or not solves, certainly addresses the operating shortfall that we've been struggling with for several years. And finally, we think that the governor should be commended for his attention to this issue of budgetary debt, this kind of overhang of obligations that we've had and will have for quite some time. He proposes both to pay off deferrals, to pay back sooner than scheduled some special fund loans, and to have some sort of mechanism working with the legislature to address these budgetary obligations, and we think that's very wise. Concerns, though, that we have with the plan, I think the biggest one still involves the notion of the election, and so much of our budget being contingent on what the voters might do. And this has implications for the state on whether we can issue our revenue anticipation notes, if there's that kind of uncertainty out there. It has implications for the schools that we've just talked about. It has implications for counties. What happens on the realignment if it's voted down? Because remember, under the governor's proposal, realignment is linked with the tax proposals. So there is an awful lot of uncertainty about either, is there going to be an election? When would it be? What happens if there is an election, if the voters turn it down? We also raised some issues on his tax proposals. For example, he has basically gone back on his proposal to eliminate enterprise zones. We would have much rather seen him stick with his original January proposal. We just think the evidence is pretty persuasive that these incentives don't work particularly well. Similarly, we have concerns about how you implement the hiring credit. These have also had implementation issues, and he's proposing, in effect, to expand the use of those credits. He also has a proposal on a sales tax exemption for manufacturing credit. And here we think the governor has raised a very legitimate issue about its multiple taxation, or tax pyramiding, the way the public finance people talk about it. But it's because you pay tax if you're a business on the equipment that you might use, and then the subsequent product that's ultimately sold is the tax on that tax. So he raises a very legitimate issue. The way he proposes to deal with it, though, we have concerns, in that he would provide kind of differential assistance for startup firms as compared with existing firms, and we're not sure why you'd want to do that. So finally, we deal with the issue of, okay, so how should the legislature deal with this remaining problem, this roughly $10 billion problem? And we offer some advice to them on that. First of all, we say evaluate the whole range of options that are in front of you. In the May revision, the governor said that it was came down to a choice between his program or an all-cuts budget. And clearly, that's not the case. The legislature has all sorts of options available to it. Just as the governor has made adjustments to his revenue plan, the legislature may want to choose amongst what they think are the best parts of that proposal, or to modify those proposals, to have them implemented for a shorter period of time or at lesser rates, or to add additional revenue proposals. You can also consider other expenditure reductions or transfers or all sorts of things. So clearly, it's not an all or nothing, and the legislature has a wide range of options in addressing this remaining roughly $10 billion problem. We do think that whatever choices it makes, it's really helpful to maximize the ongoing, the permanent solutions that you adopt. Because of actions already taken to date and the improved revenues, we probably have tackled about half of our longer run operating shortfall. Again, we're going to have some more information out on that hopefully early next week. But any more permanent actions that are taken between now and the adoption of a budget can really make significant inroads into what has been a really persistent problem over the last 3 years. We would also suggest that in thinking about revenue proposals, prioritize them. Some of the revenue proposals, in our view, are better than the others. We would start with those tax proposals the governor's put on the table where we think that there's strong evidence to show that they don't work. And I've given an example of enterprise zones as being one. We would also suggest that you look at things where it eliminates distortions. And I think the governor's proposal to have mandatory single sales factor is an example of that, where we think it's good tax policy. So as you think through all of those tax proposals, whether they're going in front of the voters under the governor's plan or not, think about the ones that make the most sense and kind of work your way down. But we do think that those options should be an important part of any ultimate solution. It's obviously helpful to provide as much certainty as you can. And this speaks not only to the state, but as I said, to schools and counties. I think everyone would agree that if you could do this without going for the voters, that's the best way, because you know then at the start of the year that the resources you have available to you. Now, if there's going to be an election, obviously, in some ways, having it in mid-year causes the most problems because people really can't plan for their fiscal year 2011-12. And in that regard, having an election that goes into effect towards the end of the year certainly assists counties, schools, everyone in knowing what they have for the fiscal year. And finally, I think we would suggest that the legislature take to heart what the governor has suggested on budgetary obligations. The wall of debt, I think, is the governor called it. I think this is an important consideration, and either through scheduling the way that you spend Prop 98 monies, or the way that you spend additional revenues that come in over the state in the future years, the way that you deal with your general obligation bond spending in order to control your debt service payments. All of these things are important, and we think that the governor is onto a very important point in the way that we incorporate those considerations in our budgetary decision making. Let me just close in a way that I haven't really done in recent times, and that is on a positive note. We've actually made some important progress. And as I said, to the extent that the legislature and the governor in their final budget actions can adopt a significant amount of additional permanent solutions, no matter what they are, we would have dramatically shrunk our operating deficit, our longer-term problem going forward into the future. So I think at last, I can offer at least some good news to my bosses. With that, happy to answer any questions that you might have.